All right, Pledge of Allegiance. I pledge
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
All right. Roll call. Debbie Dutton.
Present.
Jack Lesson.
Present.
Barbara Puffer.
Present.
Dave Sandberg.
Present.
Marion Shealy.
Present.
Scott Safford.
Present.
And there's myself, Brian Thomas. Okay, y'all have the minutes in front of you. Is there any comment or question on these minutes? None being, do I have a motion for the approval of the minutes as presented?
Motion to approve minutes as presented?
Second.
All right, motion by Dave, second by Debbie. All those in favor signify by saying aye.
Aye.
All opposed by nay. Okay, approval minutes are done.
It's cruising.
Public comment. It appears we have no one here for public comment. We'll go into item 6, which is the finance director's report.
Okay.
So,
Good morning, everyone. I'm Joe Onsick, Finance Director. So I included in your packet for the meeting is a summary of the activities during the month of January by the Finance Department. So it's pretty much just a list of everything that has taken our time, of just a few things that I will highlight for you. We did fill the 2 vacancies that we've had. We had one for the senior accountant, so we're pleased to have hired Paul Brown. He has a master's in accounting. He has over 25 years' experience. He's had several CFO and finance director positions with nonprofit organizations, and he was a former auditor with Price Waterhouse. So he brings a good amount of experience with him and expertise, and so he's already proving to be a valuable asset to the team. Then also, I think I mentioned that the contracts and procurement position was transferred to the finance department, so we'll be overseeing that now, and we're pleased to report that Debbie Glavin was hired to fill that vacancy. She has a bachelor's in business administration and education, and she also has over 25 years of experience. She's had several director-level purchasing positions, most notably in the transportation industry. And so with her experience, she's really able to come up to speed quickly and to assist us with procurement issues and contract issues. So we're very happy to have her on board as well. We did complete the performance reviews for our department staff. The 1099s were issued on time. There's not very many of them that need to be issued. I believe it's around 50 or perhaps a few more than that. As you probably remember from our last committee meeting, we were working on how to do the final allocation of ARPA funds, and I had provided that listing to you last meeting, and that was approved by the town council and has been accomplished. I did prepare the calculation of the operational savings that were generated by the town to purchase its own jetpack, and I sent that out. Let's see. I'm just
is that in performance now? Is that being utilized? Do we know yet?
No.
It's on order.
Oh, on order, okay.
They have to build it specifically, so it's not like you buy it off the lot, they actually have to build it.
Got it.
So I think June, I'm hearing?
That's what I understood. Yes.
Nice.
Okay. As you know, we were approved to receive the revenue replacement grant from the state of Florida. We received the signed agreement, so that's like the last step before receiving the disbursement. They told us we should have received it towards the end of January, but we have not yet received it. And then following up, they said sometimes the state takes a little bit longer if they perform an audit regarding the disbursement, which must be what they're doing since it's now a few weeks beyond the expected due date. But once we have that on hand, I did present that plan, I think the last meeting or the meeting before, of how that would be utilized, and basically, it'll go towards repaying the bridge loan. There has been a lot of effort involved in preparing the RFP document for the CDBG DR planning grant. There are specifications and terms and conditions that needed to be incorporated that are specific HUD requirements, and since CDBG DR planning grant is a HUD grant, we needed to be very careful that all of that was incorporated. And so that part has been completed, and now we're just finalizing the language of the RFP. And that's really with Frankie Kapracek. That's really his idea in terms of how he's formalized the scope of what that will be. We have finalized the building service provider agreement. This is just a minor contract, really. It's for the printing and mailing of our utility bills. It'll be done by a different party now once we switch over to the new utility billing software. We're in the process of gathering setup information for the new short-term rental software that is being implemented. So this would be a better tracking facility of that program, and it also does monitoring and follow-up. So it's much more automated than the system we had before. I don't have first-hand information regarding that, but we are involved in the process of providing the information that's required to set that system up. We're also involved in implementing the new utility billing system. The company is called CUSI, C-U-S-I. We're at the point where we're troubleshooting the data conversion and developing testing scenarios. It's proven to be a little more difficult than we were expecting, in the sense that it's a challenge to convert the data from the old system into the new system, and so there's been some unexpected things that we've discovered, but it's really basically about refining the mapping of the data from the one system to the other. Once that is worked through, we're hoping to have a total of 5 years worth of information in the new system versus the old system. From the old system. We began the process of implementing the new Tyler ERP Pro. As you've all warned me, it's quite intense and aggressive. And I thought I knew that, but the level of detail that these people go into is quite amazing. But it's also reassuring to know that once we do address all those issues and the task lists that we're being assigned, it should be a very thorough implementation process. So that part's encouraging. We're continue to meet weekly and sometimes bi-weekly with FEMA program managers for hurricanes Ian, Helene, and Milton. So that has been tedious and time-consuming alone, just to review the information. That's very tedious and time-consuming to collect, and that is done by finance staff with the help of department heads. So it's really requires a lot of effort on various members of the town staff. Let's see. Okay, these are more routine things about contracts that we had helped to prepare. They were listed here because it was time-consuming to figure out how to do it and work with the town attorney on that. There was an issue regarding how much we should be charging. If a developer needs to utilize parking spaces from the street that previously were used by the town in order to meet their parking requirements, we were needing to determine what the cost would be, like what is the potential lost revenue for giving up those spots. And at this point, through calendar year 2024, it looks like we would be giving up $4,865 per spot. And that's at this point and each year we'll be reevaluating it, and I'm sure that value will go up once the town has more visitors coming.
So what do they do with that number?
Well, this is, it'll probably become incorporated into the fee schedule, and then that would become the fee that would be potentially charged to the developers, who are looking to enter an agreement with the town for like an annual, fee. And the way it's been proposed at this point is still in the beginning stages, but that parking fee would then be calculated on an annual basis based on the average, and this is the first average that was calculated, to give a general idea of what the amount would be.
Joe, does this money include the $25 for residents on the parking, you know?
Yes,
It's included in the
yes,
pocket of money?
it
Okay.
is. It's all parking revenue divided by the number of spots. Oh, let's see, another contract, there is another effort, each year, the town works with our lobbyists to present requests to the state of Florida for funding. So 3 projects were identified so far. One was for the South Water Tower repair and mitigation. One was for the stormwater mitigation on downtown, which would be like old St. Carlos there, and one would be just the general paving of roads. They require that we match whatever they give us, 50%. So it was a challenge to figure out where we can get some of this funding in order to provide the 50% match, and which is also why these dollar figures probably don't look as high as you might think we would need. But we were limited by what is available with our cash, and so at this point we're asking $700,000 for South Water Tower repair, which means we would have to provide $350,000, and that would come from our savings from 2024. The stormwater mitigation, that's almost $600,000. I think it's $585,000. And $292,500 would also come from savings from 2024, and then the roads, $585,000. So that would be, I think, almost $1,200,000, and that $585,000 would be coming from what is accumulated in our gas tax reserve fund. That will be presented to the state legislature for their consideration and hopefully approval in the next session. We are in need, and it's due for another utility rate study. The last one that was done for the town has run its course. We had rate increases projected through to fiscal year 2025, so those have been implemented already, and now we need to look forward into the future to determine what the rates should be to be sustainable for water and stormwater. In researching it, I learned that Ref Telus was a provider for Lee County, and since we're associated with Lee County in terms of the actual source of water, sewer, so they've already, to some degree, Ref Telus is familiar with the town of Fort Myers Beach because it ties into Lee County, and so it seemed to be the best solution would be to have them also do our rate study, and because there's a contract with Lee County, we can just utilize their contract at the same rates that they would be charging us. So we're just in the process of obtaining quotes or proposals for them as to what they think we need to do. They're also encouraged us to provide at least 3 years of historical information, so that's also part of why we need to make sure that we can convert at least that much from the old software into the new software. So that's just now in the beginning stages of working with them. We're also needing to provide funding for Tier 1. When that project was first approved, there was roughly a $3 million funding deficit that had not yet been identified as to how that would be covered, so we're getting to the point where we need to figure that out. Potential funding sources include increasing the SRF loan, but and that's the state revolving fund loan that's already paying for quite a bit of the tier one. But in order to go to the state to request an increase in the loan amount, we need to demonstrate that our rates that we're charging for stormwater would be adequate to fund the debt service payments, which kind of ties back into why we need a utility rate study. And then the utility rate study, of course, would need to know how much debt service payments are going to be in order to factor that in. So they're pretty much tied together at this point, and so it's good timing to be involved in both at the same time. We do have $3 million of accumulated savings in the stormwater fund, and that has resulted from the continued collection of stormwater fees since Hurricane Ian. So that, and at the same time, the state gave us a 2-year suspension on debt service payments, so we were able to accumulate that funding, potential funding there, to make up the difference in tier one, or potentially to use some of that for other stormwater related projects that we're in need of doing. So we're trying to focus more on that since time is of the essence there. Money has also been requested from the federal government, and we believe this spring we'll have an answer, and this would be, I think it's a $10 million request. And we'll find out if we'll be receiving that directly from the federal government. So that will certainly cover these needs as well as other needs. And then there's always new grant opportunities that our consultants, Angie Brewer, are always looking for. As you may be aware, the town approved a system for demolishing private property that's in need of demolition, of course, going through all the proper steps in order to do so. And then if it gets to the point where the town needs to do it rather than the resident, then there's a mechanism in place to collect or to be reimbursed by the resident for the expense to the town, and that would be done through the private property private tax, I can't think of the term, the tax bill to the private resident. So there's an agreement that is in place with the tax collector that they could put it on, put it onto the, that person's property tax bill. But we're working to flesh out the details of what the tax collector needs from us in order to do that, and so that it's been a little more time consuming than I expected. There was a strategic planning kickoff meeting that department heads participated in, and now I went to town council, and this will be ongoing for the next year at least. But it's just at the beginning stage. We are reviewing information provided by the insurance adjuster regarding Hurricane Ian claim settlement. I really shouldn't mention anything in public as far as what that would be, but certainly we're owed more for the damage that was done than what we've already received, and so we're getting to the point of having a final settlement, and so hopefully that will then add to what I've already presented to you here, and when we get to that reviewing of that report. Okay, there's just some routine business, really.
What is gonna happen to the trailers, the next one you had?
Well,
How long is the lease now?
it's a 48-month lease that we entered into, and so they're just now in having discussions with them as to how do we go about getting out of the lease and having these trailers removed. So I don't have an update on that, but we need to be out of here. One of the reasons, of course, they're trailers, and we just can't have the risk of having them continue to be here, especially once we move into the new town hall. There's no reason to have them. And the other reason would be, we have the grant for the parkland, to develop the parkland, and that expires August 31st. So we need to finish that project, and part of finishing that project means having these trailers removed. Okay, kind of lost my place here, let's see. Oh, that's okay. The trailers, just some other contract issues. Brought to your attention, a couple meetings ago that we're looking at the utility billing system to make sure that the correct rates have been charged. So I went through all of the billing itself, and I've been able to find, and note any discrepancies, but now there also have been a multitude of adjustments which could actually then offset any discrepancies. So that is the next step, is just to make sure that these adjustments that were given, to see what the impact on these discrepancies might have. And once that's finished, I'll be able to provide everyone with final figures or final report on that. But I have not had any time to work on that this last month. Hopefully I can jump back into that this month.
Again, Joe, that's water and stormwater.
Yes, water and stormwater, primarily water. I think stormwater is fine, as far as what I can tell. It's just the water, its rates. It's just became very complicated in terms of how the changes from year to year, or mostly it involved last year, how they were implemented and the timing of when they were implemented, and just trying to understand the impact, if it's minor, major, and what we need to do to address it. But I want you to know about it, and that we're working on it, but I hate to say anything publicly because I don't want, as far as figures, because we don't have exact figures yet.
Sure.
And I don't want to alarm anyone, but I just want you to know that we're looking at it just to make sure we have the exact figures that we can present, and then a plan for how that would be addressed.
Because there were a lot of adjustments made after Milton. I know I got one.
Yeah, there are, and that makes it all the more complicated.
Yeah.
And because the adjustments were made at later times after rates changed, I don't know yet how it was handled in terms of the timing of that, because it was done manually, and we did not have a system to be able to do it. So that's part of the concern. I think having it, and why we're changing to a new system, that these things can be automated, so that we eliminate any potential human error from a process like that. We're still working on the audit, or I should say preparation for the audit. It actually hasn't begun yet, and 99% of the reason is we're not ready for it. But actually, there's quite a bit of work that's been done, despite how busy we've been, so that is encouraging. There's been a lot of effort put into reviewing emergency expenditures by our budget manager, and reclassifying things in our accounts, because originally expenditures were not tagged with project numbers because we didn't know the project numbers at the time, and project numbers are changing. And so we're needing to go back and do journal entries to back out how they were originally posted and post them again with the correct project numbers. So it's a monumental task, but I would say we're 95% done with that. And so I appreciate the budget manager's effort on that. And then our grant coordinator is working very hard to put together our TDC grant application, which is due within a few weeks. And that's just involves the department heads that the grant touches. So this would be mostly anything to do with the beach, whether it's code enforcement on the beach, maintenance of the beach, and then the various equipment that we might need for that. The last part of my report is really just an update on funding sources. I tried, it's kind of a running report, just so that you have it as a reference, what our funding sources are and what the current status is. So nothing, or very little has changed, and I highlighted the things that have changed just to make it easier for you. So that almost $1.6 million CDBG-DR planning grant, as I mentioned, the RFP is being drafted and is being reviewed. Further on, we have the $5 million 0% interest loan, which is related to the FEMA projects. We've only used $311,000 of that so far, because it's for very specific projects that they have identified that we can use that for. And then as we use it, when we are reimbursed by FEMA, the reimbursement goes directly to repaying that loan. So we don't, it's kind of hand in hand. They directly reimburse the state rather than us, because the state is the one who gave us the loan. For beach renourishment, it's just an update on the amount. We have that $8 million from the state. Roughly 4.2 million has been expended, and we have almost 3.8 remaining. Let's see, the next change really is all the way down. That might be the last change. Yep, I think that's it. So that's all of the updates on the funding sources. And I could go into the financial statements next, unless you have any questions for me.
Now, in your report, though, you said you're still working on reconciliations and accruals from year end.
Yes.
So is that included in these?
Yes and no. I mean, this is, well, how can I say this? It's not, what is completed is in here. What's not completed is not in here, okay? So I couldn't even tell you. I know, for example, like water and stormwater, those are more complicated. And basically what that is, it's accruing, it's moving things into, from expense to capital projects in progress. And then also recognizing the loans that go along with it. So that has not been done yet. That's one of the very last things that we do when the audited financial statements are prepared, and really the auditor helps with that. So it's not something that's included at this point. But basically, any actual revenues and expenditures that we've included are in here. It's just that some of it may move into capital at this point. It might be easier if we go to that very last page of the report, because then I can tell you, this is the one that is the analysis of emergency expenditures, reimbursements, contributions, and related FEMA, FM, and insurance receivables. So this is what I have focused on, because this is something that's been, I think, a critical component of what needs to be done for both the audit for last year and then where we are now. So this brings everything up to date through the end of December. And what this shows you are all of the emergency expenditures that we've incurred in that very first column since Hurricane Ian, and it's broken down by project. Why it's, and then as I'll kind of talk through it a little bit and then back up to try to re-explain it so that you can understand it better, why I even was working on this. So the ultimate goal is I needed to calculate what our potential receivables are from FEMA. So in order to do that, you have to start with what were our emergency expenditures. From there, you have to deduct any insurance contributions that we've received. And so that's that second column. And we receive insurance contributions by project, and FEMA wants to know which project they pertain to, and so we try to the best of our ability match the insurance proceeds to projects. It's not always that clear cut, but we did to the best of our ability. And if FEMA doesn't agree with how we're interpreting things, of course they will change it. But as best as we understand it, this is matched up to the projects. Then from there, that gives you the eligible amount of FEMA reimbursement once you deduct insurance proceeds from the expenses. Then so that becomes your potential receivable from FEMA. From that, you deduct anything we've actually received from FEMA, and that's that third column. And then you are left with the actual receivable from FEMA, that's the fourth column. So, just to back up again, we had 29, almost $30 million of expenditures so far. Then we have almost $15 million of insurance reimbursements, and then we've had $18 million of FEMA payments coming in. That leaves us with still $7 million remaining to be collected from FEMA, we believe, and this is just our own internal estimate based on these figures. This does not include anything we have yet to spend on any of these projects that would then become additional receivable from FEMA. This is only based on what we've actually spent. The one insurance receivable we know we'll be receiving, and that's the $1 million reimbursement for the temporary housing of the town hall. So that would go towards the expenditures of Box Modular. We haven't received it yet, but according to our policy, we're supposed to get the $1 million. But they've held off on that because of this insurance settlement negotiation with the insurance adjuster. But that is one for certain that I think we can put in there. In addition to that, we should be getting more, but I don't want to put a figure in here until we know what that is. So this is like the minimum of what we'll be getting. I had to throw in a separate column for this refund receivable. That's going to go away because we've either have already received that $1,000 or we have to write it off. It's from a vendor that's just carried forward since 2023. Then all of that goes across to kind of calculate out what expenses we're not going to be reimbursed for, and this has to do with where FEMA's looked at the eligible expenditures and they've already told us, well, we're only going to pay you up to a certain amount. So then that difference is falling out into this unreimbursed expense column, as well as things that were never eligible for FEMA. So it's roughly $374,000 of unreimbursed expenses that we've had so far to date. Then we also have almost $12 million. Well, let me back up. That last column, it's unused insurance proceeds and contributions. So we have contributed out of the general fund, way down at the bottom there, that $4.1 million. That $4 million is $2 million from savings from 2023. There's another $2 million we just put in that were savings from 2024, and we've budgeted to put in on a monthly basis an amount that'll accumulate to $225,000 or $250,000 by the end of this year. So those are contributions coming in from the general fund. So there's roughly about $7 million of that total of insurance proceeds that we've received that we have not spent yet. Some of it will be earmarked. For example, about $1 million already is earmarked for the new town hall to help fund some of the renovation there. Some of it has to do with water system repairs, so that they need to be set aside for that. But you can kind of look across to see what those projects are, and some of these projects just certainly haven't even started yet. So I wanted to explain this sheet because this ties into that middle column is the receivable column.
Mm-hmm.
So that then ties into the balance sheet for the emergency fund. And that's in that due from other governments. Now, for some reason, it's not matching, and it did match the other night, but
It's close.
I think I can, once I find it, I can explain it, but at this moment, I apologize. Everything tied out, but I think I had to make one final adjustment. to this, so I apologize, it's not perfectly clear. That is interesting. Okay, well, I'll have to double check that. Because the whole reason I did all this was so that would make perfect sense, and now it's not for some reason. Okay,
And you are talking to the audit committee.
and I am talking to the audit committee, so I apologize, because the deferred inflows in the emergency fund and, well, okay, that, the deferred inflows includes the $1 million insurance receivable. So without that $1 million insurance, or if you take out the $1 million insurance receivable on the deferred inflow line in the emergency column, it would become $7,087,983, which matches the due from other governments. So, I mean, at least that I can explain that. Why the 787 doesn't match this, I will have to go back and look at that. There might be something in here in this receivable column, obviously, that I didn't take into account, that I think I must have added in at the last minute, so I apologize. But I mean, this is just an illustration of how manually intensive putting together the financial statements is, especially when it comes to doing these receivables, and it can involve an error, which obviously I must have, so I'm sorry. I won't dwell on that. So otherwise, the bridge loan, we're still at $9.6 million. We have not needed to really hardly use anything at all. The increase in that balance is just interest revenue so far this year. We have not needed to use anything this year. There's really nothing that stands out here. The American Rescue Plan is completely accounted for, so we have $1.2 million left to spend. So this is the cash that's left to spend for those expenditures. Most of that, and all of it needs to be spent by 2026, and we have purchase orders or contracts already signed for all of those expenditures. All right. I did not include the revenue and expenditures in my printout for you this morning because I thought it might be easier to look at the budget versus actual. But the cash flow is the next statement that I printed out for you. And you can see our cash is very good. We have almost $40 million on hand so far. There's $4 million in the general fund, almost $10 million in the bridge loan. We have almost $4 million in the emergency fund. So I think cash-wise, we're doing okay. The gas tax fund really doesn't have all that much because there's not really much activity in that fund, but there is that accumulation, some of which we can use towards matching that appropriation for road paving if we were to receive it from the state. The building fund, that's an accumulation of permit revenue during the year immediately following Hurricane Ian. The capital fund, most of the cash that's in there has to do with beach renourishment and grants that we were paid up front for, so that's why that balance is rather large. The hurricane recovery fund, that is that $5 million loan from the state that we've hardly used anything of so far. But once we have eligible projects for that fund, we will certainly use that. It's 0% interest. That American Rescue Plan, that's, I already touched on that. And then the road impact and parks impact, these dollars need to be spent on capital projects related to development. And that'll come into the discussion as they do that impact fee study, which is currently in the beginning stages of that. And then water and stormwater, you can see, on the stormwater side especially, there's an accumulation of $7 million. Roughly half of that is a result of the debt service payments being suspended for 2 years. But then that certainly can be used, at least cash-wise, to carry us over until we're reimbursed by the SRF loan, or it can actually be used to pay for those expenditures if we choose not to increase the loan amount. Okay, then we have budget versus, no, I'm sorry, this is the calculation of lost revenue. So there's a little page number 15 at the bottom. So as you can see, we're actually ahead of 2022. Most of it is tax, ad valorem tax. So there is no need to draw down from the bridge loan so far. Now, as we move further into the year, and part of this is timing because the ad valorem taxes are collected mostly in the beginning of the year, and so we have that large inflow of revenue then. But as we move further through the year, this number will probably decrease compared to budget. So we'll just continue to watch that on a monthly basis. We did budget a few $1 million of need for this year, so we'll see how if whether or not that actually plays out. Then we have the revenue.
Joe,
Yes.
just
Yes.
a quick question.
Uh-huh.
Parking revenue down pretty substantial. Is that a function of not as many people coming to the beach, you think, or is that a timing calculation? I mean, because that's a pretty $2 million for the full year coming in, and we're already 300,000 behind kind of the couple month budget. Just curious whether, Scott, whether that's
Well, it's
whether we're
part-
seeing less people. I mean, the traffic going off the beach doesn't seem like it, but who knows how much of that is contractor and whoever. But
Well, we lost, first off, we lost some spots because of the hurricane. And secondly, visitors are down. I
Yeah.
mean, most of the hotels, February's fantastic. I mean, February, most of the hotels are about 90%, so are the short-term rentals. But our shoulder season, we're just, it's
not as-
October, November, and up until about Christmas was just, it's worse than it was pre-Ian.
Got it.
So the visitors are down, everything's down. But most of the hotels though had their, this month has been really, really good. So it's just getting people back here in off-season.
Right.
It's gonna be a challenge.
And clarification, this is not to budget, this is compared to 22.
Compared to 22,
Yeah.
yes.
So pre.
Oh, yeah, got it, okay,
Yeah.
yep. Good clarification, thank you.
And that is also the total for the entire year, so obviously timing plays into it as
Sure.
well.
Yep, but
So,
the 3-month to 3-month is, we just, like you said, we just
Yeah.
haven't got it,
yeah,
people back.
I mean, it's just not, if you look at just from a hotel standpoint and just from 22 to now, we're way down.
We're still way down.
Yeah, so it makes sense.
Yep, okay.
We could always increase density. I know nobody's talking about that. That's an option.
okay.
Couple more big towers, throw them in, come on, let's go.
Alright. Then, I just provided for you, the budget versus actual by line item, and this is just for the general fund. So you can see that we're $1.8 million ahead of budget. And this is trying to convert the annual budget to a 3-month year-to-date
Mhm.
amount, and compare our 3 months of actual to that to come up with that variance. So we're doing well. Again, most of the revenues variance is coming from the taxes. On the expense side, we're also doing,
I guess,
yes.
so for the taxes, obviously, we're
Yeah.
getting the taxes early,
Mhm.
but then you say your budget's really low. Shouldn't you just budget that you're getting the taxes when you're supposed to get them? I mean, just calendarize your
Or you just
tax.
divide it by 12.
We, Or just divided by 12.
Yeah, rather than that, maybe you should calendarize, what you expect.
Ideally, yes. We just don't do that. We don't have a month-by-month budget. But I understand that, the suggestion and appreciate it. We just plug in an annual figure, but we don't have it month by month.
Maybe with the new financial systems, you'll be able to do something.
Yes, I mean, time permitting, we can. We just haven't gone through that kind of analysis to do it month by month. I know we should, we just haven't had the time. Annual is about all we can handle.
Especially with the seasonality of this.
Yeah, no, I do appreciate that, and it'd be something we can have a goal to do eventually.
So back on that with people that haven't done demolition, required to do, town's gonna add it to their tax roll. I mean, at what point is there an ability for the town to claim eminent domain on some of these properties that people are gonna basically abandon them?
We haven't even brought that up at a meeting.
I mean, if they haven't paid their taxes and they haven't demolished their building, and it's been 3 years now, right? I mean, how serious are they?
What's interesting is we still yet have had to tear something down.
Right.
So just the threat of us tearing it down
It's been effective.
been really effective.
Interesting.
But that's interesting, I could bring that up at the next meeting.
I'm sure it'd be greatly popular among the population, but at some point, people have to do something with these properties. You
Yeah,
can't just
a lot of
abandon
it,
them.
there's, I think, 90 properties that people are still hoping and waiting for FEMA to, like if you wanna lift your house and you don't have the funds, you can apply to get your house lifted.
Okay.
But FEMA has to give you the money first, and from what my understanding, or our understanding in our last meeting, is it's being held at the state level right now.
Okay.
And they've had 5 different directors in the last 2 years since the hurricane, so that funding just is not happening quick enough. So that's one of the reasons why there's still 90 structures just, it looks like they're abandoned, it looks like they're sitting there, but people are generally trying to, get help. So it's kind of a catch-22 where, everyone's is tired of looking at these structures, but, the backstory is some of these people are really trying, but
Sure.
the government's just holding them up.
All right. Good clarification, I didn't realize, so.
Is that the same with the commercial properties?
No. Commercial properties, we're on it, I mean, we've, Neptune started this weekend, Wyndham's in process, so it's the same thing, we finally said, look, we're going to knock it down if you don't, so that's been the driving force to get these guys going.
Are you giving them deadlines?
Mm-hmm.
I'm down by the Wyndham, it's a snail's crawl.
Looks like it.
That's a factor of who they chose, in my opinion, but, yeah, we give them, we notice them, so they have 30 days to act on it, so.
But
They're-
that's just a starting point, right?
Yeah, all they did was move the stuff
Yeah, yeah.
out.
Yeah.
So now we've got a trash
I-
place and a bed.
I
Facility.
totally understand, I'm not arguing with you.
Going forward, maybe the council would think about putting a deadline, if it's legal to do.
Yeah, I mean, I could bring that up. I wouldn't be opposed to it. Empty lots sure look a lot better than, what we're looking at now.
Right.
But if you calendarize the budget, then you wouldn't have to have that explanation every month, saying, well, we already got the taxes, we have to wait.
I understand.
There's probably, it wouldn't have to be all line items, probably, it's
No.
something like that, the ad valorem tax, maybe couple of bigger line items to start with, to, again, make it a little less cumbersome for you, but,
People would follow it better.
because the majority of the line items probably straight line, and it is fine, it's not big enough in variance, but some, maybe a couple of the line items where you do have huge variances of timing, that might make some sense for you.
Just looking at historical data and ratioing it, it's not trying to have work.
But we are.
But you're
But
right.
once you do it, then it's
That's a
easy.
good point on the parking too, is, we're January, February, March is when we get most of our parking revenue.
Yeah, and that could be helpful for things like that, to see how far behind you really are, kind of
Right.
relative. For those things that really do have some seasonal variance, you know, do we have a problem, do we, you know,
Right.
where are we running behind on that shoulder period way more than what we thought we were gonna run behind?
Exactly.
And the other thing too is, you know, to help, I remember from last year, we offered free parking for certain times of the year, just to generate some business down, especially in the downtown district. So these guys, a lot of these guys, I recall, you know, May, June, July, they were just, they needed any help they could get. So
Yeah.
that was one of our decisions, is just to waive the parking so we can get more bodies down there.
Yeah.
So, I don't know if we're gonna do it this year, we'll see how season goes. Or off-season, I'm sorry.
Well, really, I provided this, line item so that, and I tried to do a descending order of variance so that you can kind of see where the issues are, or to help better understand why the variances is what it is. The regular wage line item, that's really has to do with the vacancies. We're struggling with finding qualified people, so that's why we have that variance there. That second large expense line item, landscaping, that's at Estero Boulevard project. It's almost $800,000 that we have budgeted for that, but it's not very much has been done yet, but it's going to be soon, from what I understand. So once that happens, that line item will go back to normal. Otherwise, I guess if you see anything that looks strange or needs an explanation, just let me know, and if I don't know, I will find out for you, but I just wanted to provide this for you. So then the total variance for expenses is $736,000, which means at this point, on an average, we're, in terms of the first 3 months, we're at almost $2.6 million positive variance to the budget. Okay, and then this is the department one is exactly the same thing. Hopefully it matches, it better match. Yes, it does match, okay. But it's by department, so, and again, it's in descending order of variance, so you can kind of have an idea of where the issues might be, that might need explanation. Okay, then we have the cash and investments. The one thing I point out here is, for a long time, we had those bonds that had a pathetically low rate of return, but now the last 12 months through September, they don't, this information isn't readily available, it just comes out periodically. So the most recent rate of return was for fiscal year ending September 30th, and that was at 9.72%. But that's where we have those. I was just getting ready to move those because it just seemed very low, but and our last certificate of deposit that had a pathetically low rate was redeemed in October. I'm just leaving it on there as a placeholder for the rest of the year, but we don't have any plans of ever going back with that. But we have very good rates of returns on just our normal banking accounts. So we're happy to leave it there for now. It's much easier to deal with, and it's all readily accessible. And that is all I have. I'm happy to provide more.
Anybody, any questions on the finance director's report? No? All right, there'll be none. I'll look for a motion to approve said report.
I-
All right,
Second.
Barbara, Jody. All those in favor signify by saying aye.
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 All those opposed, nay. All right, member item and reports. Do we have any member item and reports today? All right. There being none, we'll notate next meeting is Monday, March 10th. Question, I know you said, Joe, the town clerk.
Yeah.
So it seemed like the meetings are not necessarily voluntary unless we don't have a quorum. Is that right? In terms of the date?
That's correct. I mean, for purposes of scheduling out into the future, the town clerk has asked that all of the individual committees, like, stick with the schedule that they have.
Sure.
Now, if there's a desire to find a different date, in general, we can see what's available and then move it to a different date going forward, but, that's up to you, certainly.
I mean, there's something to be said for certainty, but my question was just more of a, it didn't feel very voluntary, but it is what it is. So.
Well, you don't have to meet every month. I mean,
No,
if
I
that's
love
what you-
meeting,
Okay.
it's gotta be the second Monday of the month, I just seemed a little, I get there's a schedule, so that cleared it up for me.
Okay.
All right, I try not to be a contrarian all the time. Okay, well, if there's no other business, before our committee, can I get a motion for adjournment?
Motion to adjourn.
Dave, have a second?
Aye. Okay.
All those in favor signify by saying aye.